Open a new case file. We are hunting a Wall Street mystery. Somewhere in Washington, there are traders who seem to catch market shifts before the rest of us do. They don't work at a hedge fund. They work inside the United States Capitol. And yes, under current rules, members of Congress can own and trade individual stocks. What isn't legal is trading on material, non-public information. But here's the catch for the public. Most stock trades don't become visible until the disclosure is filed, due no later than 45 days after the transaction. That means you can be reacting to a paper trail that's already weeks old. In a 2023 University of Maryland Program for Public Consultation survey, 86% of respondents supported banning members of Congress from trading individual stocks. And in January 2026, bills in both the House and Senate are again moving to clamp down on it. So what is really going on? Is the so-called Pelosi portfolio a signal of financial skill or a system with an invisible edge? Today we follow the filings and the timelines, data, not conspiracy.
Let's start with the sheer scale of this. In 2025 alone, Stock Act disclosures added up to more than 13,000 reported trades, totaling about $636 million in disclosed volume, based on a common cause tally using Capital Trades data.
That is a massive amount of money moving around. But the big question is, are they winning? Is everyone beating the market?
Not as often as the memes would have you believe. In its 2025 Congressional Trading Report, Unusual Whales estimated that only about one-third of tracked disclosed portfolios beat the S&P 500 via SPY that year.
Wait, only a third? I thought the headline was that they are all stock wizards.
The data doesn't support the wizard narrative for the average member. The S&P 500 had a strong 2025, mid to high teens, depending on the benchmark, and whether you include dividends. Unusual Whales estimated Democrats in the mid-teens and Republicans in the high teens, basically index-like.
Hold on. We have to be very careful with these numbers. We are looking at public disclosures, not audited brokerage statements. These forms report values in broad ranges. If a member buys a stock, they might list the value as between $1,000 and $15,000. We are just guessing the midpoints.
So we don't actually know their exact profit?
Exactly. It is fuzzy math. And even if they do win, correlation isn't causation. If a member's portfolio is heavy on tech stocks during a tech boom, they look like a genius. That is just market beta, not inside information.
That is a fair critique for the rank-and-file members. However, there is a signal in the noise. Newer research suggests the real edge isn't with the average member. It is concentrated in leadership.
Leaders specifically.
Precisely. A working paper from the NBER issued in November 2025 analyzed this. It found that lawmakers perform like everyone else, until they become leaders. After they ascend to leadership roles, their returns outperform matched peers by as much as about 47 percentage points per year in the paper's sample.
Now that is the real problem. It doesn't prove they are breaking the law, but it strongly suggests the system rewards power with profit.
47 points a year. That is hard to wave away as luck.
It's not just a meme anymore. It's an entire industry. You have apps, websites, even automated bots, all designed to do one thing: mirror trades from lawmakers' public disclosures.
But does it actually work? Or is it just internet hype?
The numbers are striking. In 2023, The Washington Post reported that one major copy trading app's Pelosi portfolio posted a 45% gain.
And the S&P 500?
About 24% on a price basis. So the tracker beat the market by a wide margin. And for 2024, the app later said the tracker gained about 54%, while the S&P 500 was up about 23% on price.
Okay, that sounds like genius or magic. How do you beat the market by that much, 2 years in a row?
It's an aggressive strategy. The disclosures skew heavily toward big, fast-moving tech themes. And here's the kicker. Some of the biggest bets aren't just shares, they're call options.
Options? That's leverage. That's high risk, high reward.
Exactly. If you're positioned for a tech surge with calls, returns can jump fast.
Hold on. Let's pump the brakes before we crown anyone a stock-picking wizard. We need to be precise about who is actually trading.
It's the Pelosi portfolio. Isn't it her?
Look at the actual filings. A lot of these transactions are marked SP for spouse and sometimes JT for joint.
That's right. And Pelosi's office has said she doesn't own stocks and has no prior knowledge or involvement in the transactions, pointing to her husband as the investor.
So people are copying her husband.
Essentially. But there is another catch: the delay. These forms aren't a live feed.
Right. The rule gives up to 45 days to report a trade.
Take one high-profile example. An NVIDIA options purchase dated November 22, 2023, didn't show up publicly until December 21st. If you're copying disclosures, you're always chasing the past.
So you're buying weeks after the move has already started. And yet, the trackers still show those massive returns?
That's the mystery. Even with the lag, the tracker can end up riding big, longer-running waves in the market. Which brings us back to the core problem.
Perception. Even if she isn't placing the orders, when a former speaker's household makes big bets, people assume the playing field isn't level.
We need to separate Hollywood insider trading from how Washington actually works. It's rarely a secret phone call in a parking garage. It's usually structural. Think about the flow of information. Members sit in closed-door briefings. They see draft legislative language before it's public. And they hear early details about policy priorities and regulatory focus. That's the informational advantage. The Brennan Center flags the core conflict. Lawmakers can access non-public, market-moving information, and they can shape policy in the same sectors where they may hold financial interests. Citing a New York Times analysis, the Brennan Center notes that from 2019 to 2021, 18% of members traded stocks in sectors related to committees they served on.
Hold on, that sounds damning, but we have to be precise. Trading in your sector is a conflict of interest risk, but it isn't automatic proof of corruption. Correlation isn't causation. If a member of the Armed Services Committee buys a defense stock, that doesn't prove they used a secret tip. They might simply be bullish on the sector.
But if they did have a secret tip, we'd see it in the data immediately, right? We could just copy their trades.
Not at all. That's the disclosure lag. Under the Stock Act, members can have up to 45 days to report a trade, and the filings usually list only broad dollar ranges, not exact prices. In the stock market, 6 weeks is an eternity. By the time you see the disclosure, the market may already have moved.
Okay, so the rank and file members might just be lucky or late. But what about the people at the top? Does being a leader change the math?
The data suggests it can. An NBER working paper released in November 2025 finds that lawmakers who later ascend to leadership perform similarly to matched peers beforehand, but after they become leaders, they outperform by about 47 percentage points annually relative to those matched peers. It's a working paper, not a final verdict, but the gap is striking.
47 points. That is massive. Why?
The researchers propose 2 channels. First, political influence. Leaders control the agenda and timing, which can change what information is knowable when. Second, corporate access. Power attracts attention, so leaders can end up with more meetings, more context, and better signals about where policy and money may be headed.
And yet, we have to look at the limits. Take the Nvidia example that fueled the Pelosi portfolio chatter. Paul Pelosi sold Nvidia on July 26, 2022, 2 days before the House passed the Chips and Science Act on July 28. It looked suspicious to critics, but the disclosed sale was at a loss.
Exactly. That's why the debate is shifting. It's not only about proving a crime trade by trade. It's about whether the system itself, the briefings, the reporting lag, and agenda power, creates an edge that ordinary investors can't replicate.
So it might not be a crime, but it certainly looks like an edge. And that perception alone is fueling the fire for reform.
If you think this is just a Pelosi problem, look at the disclosures. It is absolutely bipartisan. In 2025, Capital Trades tallied 140 members of Congress, making 14,451 reported trades, totaling about $720 million in disclosed volume. And it's not just one side of the aisle.
Wait, both parties? I thought the narrative was that one side had the magic touch.
Not according to the data. Using Unusual Whale's estimated portfolio returns from disclosures, the spread in 2025 is pretty tight. Democrats averaged about 14.4%, Republicans about 17.3%, and their S&P 500 benchmark came in around 16.6%.
Which tells us something important. This isn't about everyone being a stock-picking genius. It's about the system. The trading is concentrated in huge household name companies. In 2025, the most traded names included Alphabet, Nvidia, Microsoft, Amazon, and Apple. They aren't discovering secret penny stocks. They're riding the same waves as the market.
So if they aren't beating the market by huge margins on average, why does everyone care?
Trust. Pure and simple. You can't be the referee and a player in the game at the same time. Even if the returns are average, the appearance of a conflict corrodes faith in the institution.
And the public gets that. In a July 2023 survey, the University of Maryland's Program for Public Consultation found 86% support for banning members of Congress from trading individual stocks. 87% of Republicans, 88% of Democrats, and 81% of independents.
That is rare. We don't agree on pizza toppings these days, let alone policy.
Exactly. The data suggests people see this as a structural flaw, not a partisan weapon.
Which is why the reform bills we're seeing now keep attracting sponsors from both parties. The pressure isn't coming from the left or the right. It's coming from the bottom up. Here is the part people miss. While we argue about genius trades, Washington is actually reacting. Not in some vague someday way, this month. On January 14, 2026, the House Administration Committee held a markup and voted to advance a new proposal.
Wait, actually moving? Usually these bills just die in a drawer somewhere. Are they about to ban trading, or is this just performative?
That depends on which bill wins. And right now, there's a real fork in the road. On one side is the lighter touch approach. H.R. 7008, the Stop Insider Trading Act. On January 14, 2026, the House Administration Committee ordered it reported, amended, on a 7-4 vote.
Okay, what does it do?
In plain English, it blocks new purchases of covered investments. You can't go out and buy new individual stocks. But selling isn't banned outright. Sales would require a public notice filed at least 7 days and no more than 14 days before the sale.
Hold on. If they only ban buying, that means they can keep holding the stocks they already own, even if they regulate those companies.
Exactly. That's the core critique. It can freeze conflicts in place instead of clearing them. And that's why the other path, the hard ban, has so many supporters. Bills like H.R. 5106, the Restore Trust in Congress Act, or HR 1908 go further. They don't just say, stop buying. They push toward divestment, getting out of individual stocks and similar assets entirely. And at least some versions come with teeth. HR 5106, for example, includes a fee and requires profits from prohibited trades to be disgorged.
And this isn't just a House fight. The Senate is active too. On January 15, 2026, Senators Gillibrand and Moody announced a bipartisan push with their own Restore Trust in Congress Act. The pressure is coming from both chambers.
Why now, though? Why is this suddenly moving after years of nothing?
Because the public support is overwhelming. A University of Maryland Program for Public Consultation survey, July 2023, found 86% of Americans favor banning members of Congress from trading individual stocks. That includes 87% of Republicans and 88% of Democrats. In a polarized country, you almost never see numbers that high.
It's a survival instinct. The argument has shifted. It's no longer only about proving someone committed a crime. It's about the system itself. If you write the rules for the economy, you shouldn't be betting on the outcome. The question isn't, is Nancy Pelosi a genius? It's, do we want lawmakers acting like regulators or like traders? Right now, Congress is trying to decide.
So where does that leave us? We've looked at the numbers, and the scale is undeniable. In 2025 alone, trackers compiling official disclosures counted about 14,000 trades, roughly 14,451, totaling around $720 million in reported value. That is a lot of activity. But is it pure genius?
Not across the board. By one widely cited estimate, only about 32% of disclosed member portfolios beat the S&P 500 in 2025. The "everyone is a wizard" narrative is a myth. The real anomaly is leadership. An NBER working paper finds lawmakers trade like peers before promotion, then outperform matched peers by roughly 47 percentage points per year after they ascend into top leadership roles.
And that's exactly why the pressure is on right now. We aren't just talking about ethics anymore. We're watching bills move. HR 7008, the Stop Insider Trading Act, was ordered reported out of the House Administration Committee on January 14, 2026. And on January 15, 2026, Senators Gillibrand and Moody rolled out a Senate push of their own to ban members and immediate family from owning or trading individual stocks. The system is blinking red.
Exactly. So here is the bottom line. If you are an investor, don't blindly copy these trades. The disclosures can land up to 45 days after the transaction, so you're late to the party. And if you're a voter, watch the roll call. The question isn't whether they can trade today, but whether they will be allowed to tomorrow.